Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, we take a look again on the gold market. So there was a lot of passion and noise around the elections in the United States in the recent couple of weeks, so markets and people are just tired from all of this stuff. And finally, at least today in the morning, it was announced that Biden has become the president. So mostly this event was priced in by the markets, so everybody anticipated that. And in today's weekly report, we have taken a look at the two major driving factors for the gold. For those of you who forgot about that, I just would like to remind you that we have two driving factors currently. The stimulus pack, which is a short-term factor, and real interest rates, which is a long-term and major dominant fundamental factor for the gold. And here we have different view on the situation. In the shorter term, just in two words, if you do not want to read report, I'll just briefly explain our position. In the perspective of 1-2 months, we have the positive view on the gold because stimulus will be provided, more probable that they will be greater, and it could be if Donald Trump would become the president. Despite that many investors currently are worried about the red Senate, we think that these risks are overestimated just because those people who were stubborn before the elections, after elections, hardly will be stubborn because it makes no sense after the election. Second, we also think that among the Republicans exist some floaters that will make it more probable to push the stimulus pack through the Senate. And that will make the task for Democrats more simple. Besides, you know that Fed strongly support the idea of the stimulus with the highly accommodative policy, and Jerome Powell for a long time repeat the same thing, that it's more stimulus should be as soon as possible. Finally, the long-term tensions between the Jerome Powell and Donald Trump finally will be eliminated, and that's also the positive event for the market. Also, we suggest that the stimulus pack that now stands in discussion will become not the single one. Currently, it already will be the second stimulus pack, but we suggest that there will come more because the United States have the huge economy, mostly 1/6 of the global economy, or even greater right now, and they yet to be start the fight against the pandemic. So no lockdowns have been started, and this task is still stands on the table, and Biden is just starting to resolve it. And we suggest, following the democratical usual financial domestic policy, they support more stimulus, more growth of the economy, higher budget deficit. So all this stuff promised to be supportive for the gold market. In perspective from the 1-2 months, depending on what stimulus will be accepted, how large they will be, how fast they'll be taken, the upside perspective could be different. In the most positive scenario, we suggest that it could be some 2160 area approximately. In the central scenario, we suggest that market could reach some targets inside of this drop. So it could be either our ABCD pattern here or maybe slightly higher, so it will be action above the 2000, but still it will not become the new top. In the most positive scenario, it could become the new top. Second driving factor is real interest rates. Here the situation stands more difficult. In the longer term perspective, we think that hardly we will see on the gold the real new long-term bull trend. And within the perspective on 1-2 years, we think that gold could start deeper retracement, or maybe in the best case it will be just flat action, but a few reasons. First of all, the global economy will slow down. The United States is not an exception. Besides the United States, as I said, no struggle against the virus has started yet. So all the stuff stands ahead. It means that inflation expectation, inflationary pressure will be low. At the same time, massive liquidity injections will raise nominal rates. If even nominal rates will be held by the Fed, it could make the negative impact in the devaluation of the United States dollar. So from that standpoint, the real interest rates could start to rise. Take a look at this picture. This is real interest rates, the black line. This is gold. Here's what usually has happened. That was second term of the Obama election, starting with the quantitative easing program by the Fed with the 40 billion per month purchasing of the bonds. These huge injections of liquidity has started, and actually this program acts still currently, mostly the same way. And you could see what has happened with the gold. Now market stands again at the bottom. So that was slightly lower interest rates. It was minus 1.5% here. It was approximately minus 1.4. But with the new injections, new stimulus, with the low inflationary pressure, real rates also could start to rise. And that will make pressure on the gold market. And we suggest that, yes, gold could fluctuate around the top, maybe it even will create the new top on the first news on the stimulus pack. But later, when liquidity injections will start to rise, we think that gold could could become under pressure and could show the pullback. Maybe it will not be a collapse as here, it will be some minor pullback and standing flat at some point, but it means that no new rally we will get. So probably we stand somewhere in the final part of this previous trend that we have. So that's our fundamental view. Technically, on the common week, we have some patterns on the monthly chart, on the daily chart, on the weekly chart that suggest that we should get some extension to the upside. And in general, as you can see, we have a few targets. First of all, this is the same ABC pattern XOP that stands 1990, 1995. Also, potentially, based on the pattern that's forming right now, we could get larger ABC pattern, but its first target will be approximately the same level, so around 2000. So we think that the most probable scenario for the gold, it's upward direction within the few months with target around 2000 or slightly high 2000, 2025. That's our first expectation. At the same time, currently market stands at the OP target, Biden's which is almost priced in and it stands at the overbought. Market was in tension the recent couple of weeks and need to relieve. Besides, we're coming gradually to Thanksgiving, and it could trigger some booking of the profit that could result in some pullback. At least by the technical picture, it is possible. So we could get this pullback. Besides, take a look. Market keeps harmony accurately around this line, the B top, and you can see. And following this harmony, here, guys, we could get something that could look like the reverse head and shoulders. Not necessarily that we will get the drop right here, but even retracement somewhere to the 1920 area, this will be quite enough to keep the shape of the pattern and then starting this upward direction. So we suggest that pullback here is very probable in the coming week because it will be some information vacuum after the elections storm, and that will get market chance to rest. On the 4 time frame chart, we could keep an eye on few levels. So you can see around 1915, 1920 is big support cluster, few levels come from support. That's our primary level to watch for a pullback. So once the market will appear here, we will see what we will do, depending on what manner this market will approach, what patterns will be formed. So potentially, currently, we consider this level as a potential level for taking the long position with the upward continuation. That's our current view on the situation. Theoretically, it is possible that on the Monday's open market could hit the XOP target, but well, currently it seems not quite probable. I think that the chances not are very significant. As I said, Biden's victory is almost priced in, and more probable we'll get the pullback on the market in the beginning of next week. Finally, we also have stormy scenario that we discussed yesterday in the report on the Forex market. It suggests rising from the ash of Donald Trump, if it will succeed in the contesting of the results, Currently, guys, this scenario mostly theoretical rather than realistic, but we will have to mention it just to complete totally the picture of the risks that exist right now on the market. In this case, of course, we will have to create absolutely different picture for the gold market if this will happen, because this scenario stands side by side with probable chaos in the United States. Social unrest definitely will be, and I'm sure that Democrats will not just give the victory to the Trump in case if it will be contested. So I do not want to talk a lot about this scenario because we think that's more phantom rather than a real, but we just mentioned it. That's we need to consider as well, because everybody also talk about that. So you could see it in mass media, you could see it in the analysis discussion, that yes, everybody think that this is phantom, this is hardly possible, but they are mentioning it because, well, you could see in the news that Donald Trump intends to contest the results, and who knows what will happen. So by far, let's follow our central view for watching for a pullback and watching for a chance to go long again on the gold market.